Welcome everyone, this is John Sheely with Traders Country Club, and this is our commodity review for April 16th, 2016. I often looking at different commodities, but today I want to talk about copper. And the reason I'm showing you this is because this is very important based upon the information that we normally teach our students in the Masteries course. Here you're taking a look at the strong bull trend that occurred in late February and basically middle of March. Now, what is interesting is that here the stock market is beginning to move up, but instead copper was actually declining early into the early part of April here. Now, what you're noticing is we're getting a different color, and this color is based upon a potential bearish trend. And you can see that occurred in the week of early April. Based upon the coursework, where does this decline start and when does it stop? Generally, it is because we move in this area above the moving average. Now, it's not based upon the moving average alone. The moving average is only one part of it. But we're taking a look at a potential developing trend here in the bearish direction. And in this particular case, it came into here. And so you had the ability to go short based upon the potential bearish trend. But as we recognized in our trend and where we recognize in our master's course, where does prices generally stop in regards to this new bearish trend? It's within two average, two range underneath the moving average. So this is why we take partial profits for new positions as we move into this area. And you can see that occurred in the latter part of the first week of April. Then we had a very strong rally. This is especially true considering that the stock market was moving up. What we're doing now is we're basically moving sideways for the last 3 days. We are actually potentially changing to a trend back in the bullish direction. And so I will be now looking forward to a new position based upon the high of Friday. And if prices begin to move up, I'm going to be putting on a bullish position. So watch that during the first week of the next week. Now we're going to take a look at crude oil. Crude oil, we turn into a quote potential bullish trend that occurred in the first part of March. This occurred actually because of different stocks in the stock indexes. In this particular case, we had a longer position, and notice the two spots that we normally tell all of our students in regards to the trends. This is rallied into two average, two range, and this is began to have a first correction, and 4 average, two range. And sure enough, this wasn't just a small. Here we're taking a look at CODA in regards to its indication that we have 2 red dots. What does that mean? It is a larger correction than what we expected, but it doesn't mean it changes the direction of crude. Instead, within 1 to 3 days, you are going to anticipate a return to the bullish trend. We don't know just how high that's going to be during the first week of April. But sure enough, here it is, and it begins to bounce up. We actually played this on the long position as a new trend position. And you can see we've had a great rally here. We've had a small correction. We actually are going to watch this price action, and if we see a little setback here and then return to these bullish trend, we'll look for a new swing trade in the direction of the bullish trend. So watch this very close in the price action. This also means, since crude oil is doing this, we're going to be watching several stocks in regards to the energy sector. Here we're taking a look at gold. Now, gold has been in a bullish trend since actually the early part of March, almost to part of February, and we've actually had some very good price action to establish some good trades here. Now, we've had corrections, but they weren't too deep, but it was setting up for swing trades. And one of the strategies that we use and follow in regards to certain systems that we follow is a 12-hour chart, and you're looking at, in this particular case, three trades that were occurred in regards to swing trades. Now notice that several of these during the early part of March, early part of April 24th, this area in here, basically we had a profit objectives, either one or two, and if the prices began to fall, then we had a break-even stop. Sometimes we cannot be able to get there, but in this particular case, we had some additional profits, and we had this set up in regards to April. Now, notice we've had a price correction that was pretty deep. We are at the moving average slightly, but remember, this is why we always talked about a single close underneath the moving average does not tell you and is not accurate of whether or not the trend has changed. So this is why we don't use the moving average by itself. In this particular case, we do have a break-even stop based upon the setup that we occurred in early April. So in this particular case, if prices do decline, then we are looking at closing the trade out. Otherwise, we're going to continue to hold this position for the next several days. For this weekly review, I want to take a look at soybeans. We originally had a potential new developing trend during basically the last part of February, and we recommended a long position to trade on the long side. This turned out to a stop loss. We lost here. We had a return to the bearish trend, but in this particular case, because we only take partial profits here, we basically put a break-even stop, and we just basically renewed the market whether or not we're going to have a new bullish trend. This occurred in the first week of March, and you can see here we've had a return to the bullish trend and a developing trend. It turned into the color, which as you see here, which is now a developing bull trend. And it's actually been the case for now about 5 weeks. We've moved above 2, 4, and 6 average to range above the moving average. That's huge. Now, because of that, I'm anticipating look for a potential short trade as a short-term trade. And the reason being is the trend is very strong. But in this particular case, we're actually watching the price action on Monday or Tuesday for a potential short. Now, we're going to take very quick profits on this position. Now, also this means if we begin to watch the price action moving down, any long positions that you have, you need to go ahead and close it. So just think of that. Watch the market. Now, let me show you something about the weekly as well. Take a look at the weekly chart from the lows, and you're noticing it's 1, 2, 3, 4, 5, 6, 7 weeks in a row. This is what we call vertical price action. But we have gone straight above the moving averages of the weekly chart, something similar that we saw of 2015. So this is why we're looking for price action to have a correction fairly soon, at least within a week. So watch this price action. Now, does that mean that you want to take a big short and for a long-term position? No. We are talking about a short-term trade for a quick trade, but in fact, what we're looking for longer term is a new long position. Basically, look for a large correction here. Look for a new trade in the direction of the bull trend above the weekly chart. Now, we will set up trade alerts for these particular trades, and as well as watching the coda in regards to putting on positions on versus automatic execution. This is John Sheely with Traders Country Club.